ICT has finally explained in detail how to trade the silver bullet. And in this video, I'm gonna show you exactly everything you need to know to trade this model. Also, he said that this is the only model you need to learn to be profitable and successful in trading. You will not have to watch anything else, any other video. You will not have to learn anything else in trading. This is the only thing you need. And it's from ICT himself. I'm going to show you in this video everything you need to know for the silver bullet, everything I learned from ICT himself. And I'm telling you, do not skip through. Everything I do in this video is as short as possible with as much information as possible. So you don't have to spend hours watching ICT. And if you skip through, you will most likely fail. And then you will have to watch the video again. So, you're basically only wasting time if you skip through. So let's waste no time and get right into the video. So these are the types of silver bullet that ICT has explained. What you want to do is target these first 5 PD arrays. Previous day high or low, previous session high or low, previous week high or low, new week opening gap, or expansion from new week opening gap. So these 5 things, remember those, please. I'm gonna just show you in very simple example how the silver bullet works. So before I show you how the silver bullet works, let me tell you the times in which you should trade the silver bullet. So these are the times from 3 to 4 a.m., 10 to 11 a.m., and 2 to 3 p.m. New York local time, always. Always New York local time. It's not hard to set it up. Just click here, New York local. Easy as that, okay? This works on Forex and also indices. How to trade this model? This is our previous day, week, or session high, okay? So that's our draw on liquidity. That's our target. Now we can see price is doing something and it makes a move between 10 to 11 a.m. It leaves a fair value gap right here. That's where you want to enter on the trade like this and target your high right here. So your entry, okay? This is what's different from all of other videos and also my videos. You want to enter from 10 to 11 a.m., but you can hold longer. So for example, this is our new 10 to 11, and you want to enter between 10 to 11 and hold for the target. And now another tip that ICT told us. So this is the first tip ICT gave us. The range of the trade should be at least 10 handles or 20 pips on Forex. That means from the best possible entry, and the best possible entry is, for example, low of the fair value gap, okay? You want to take your measurement and measure all the way up to your target. And that should be more than 10 handles or 20 pips. Now, it can be lower, but if it's lower, it's lower probability of the trade working out and giving you your 5 handles that you're targeting. So your target is 5 handles, but your range should be at least 10. So it's 5 handles, target profit on indices, and 10 pips on Forex. Very simple. Now, let's just write down the tip. Enter in the time frame. So only the entry should be there, but you can hold longer. Now, another tip. You can enter on a fair value gap that was formed before the 10 to 11. So fair value gap formed before silver bullet time is also entry. That means this. We have 10 to 11 or the silver bullet time, and we have this fair value gap right here. Okay? And this fair value gap was formed before 10 a.m. So this is our entry. And our target is again some draw on liquidity. Now let me talk about these two. ICT optimal trade entry and 22 model. ICT optimal trade entry is just for you to have better and higher probability of the trade working out in your favor. So let's look at this right here. Let me just zoom in. So for example, you have this move right here, which is this move right here, okay? Take your fib from the bottom to the top, and below 0.5 of the fib is your optimal trade entry. So if a fair value gap is below this 0.5 fib, That's your optimal trade entry, and it's higher probability setup. Enter here and move up. Simple as that. And 22 model is just the model that ICT was teaching last year. And it means that in Silver Bullet, you're using market structure shift, fair value gaps, you're targeting inefficiencies in the market, draws on liquidity, and stuff like that. So sometimes you're not targeting the high from previous session day, high, week, or something like that. You might be just targeting a fair value gap, which is inefficiency that wasn't filled yet. Okay, so imagine you have a fair value gap here, and it hasn't been filled yet. So that's your target on Silver Bullet. So you enter here, and you're targeting this fair value gap and take profit here. So let me just go over all of the things again. First, you need to be in these Silver Bullet times. Simple as that. Then look for a range of possible 10 handles or 20 pips. Then your profit target is 5 handles, or at least trim at 5 handles and make it run more, or it's up to you then. Then your entry should be between the Silver Bullet times. Your target could be filled after that time. And last but not least, you can enter on a fair value gap that was formed before Silver Bullet time. So let me show you just a couple of examples of the London Silver Bullet, then the New York AM and New York PM Silver Bullet. So let's get into it. Here I have marked out the earliest AM session from 3 to 4 AM. We can see we have our draw on liquidity from previous day low, and we are overall bearish. So we want to wait for a fair value gap to form and enter on that fair value gap. So we got our fair value gap here, and that is our entry point. So price entered the fair value gap, we go short, and now we're targeting this low. Take your measurement and look if the trade has possibility of 10 handles. And look, it doesn't mean that the 10 handles should be from your entry to the target. It should be from the best possible entry. So from the top of the fair value gap all the way to the target and below, because you don't want to see just touch of it, you want to see a break. So here we can see 10 handles are possible. So let's see how this plays out. And we got filled right here, also 10 handles, and it's simple like that. And you can see that the trade played out after the 4 AM range. Now let's look at the 10 AM. So once again, we are here from our range 10 to 11. We can see previous day low right here, which is our draw on liquidity. We can see that we are also bearish after we reach this buy side liquidity. So now we wait for a bearish fair value gap. Now huge candle. Do we get a fair value gap? We get a fair value gap. So this fair value gap right here is your entry point. Also take your measurement. You can see that this is clearly from the best point to the low, and below the low it's 30 handles. And you want 10 and more. And your target is 5 handles or more, or at least trim at 5 handles sometimes. So this is our entry position. And let's see how this plays out. You can see there was almost no drawdown at all. And we got our 5 handles like right away at the from 10 to 11 AM. We got 5 handles easily, and we also got our target sell side liquidity for like 20 handles. And we can see it dropped even lower. Now let's look at the last example, the PM silver bullet. So right here, we are at the 2 p.m. to 3 p.m. silver bullet. Let's mark it out. Now we are bullish here because we can see that the price has been supported by a fair value gap, and we can see break of market structure, and also the price came back into this fair value gap, closed in the fair value gap, so it's holding the price. So we are bullish here, and our target is this high right here, which is the buy side, and also we can see there is this inefficiency. So this would be the 22 model where you're targeting inefficiency and also buy side. So 2 p.m. we can see fair value gap might be formed here, and it made a very small fair value gap. You see, we got a fair value gap before our 10 or 2 p.m. silver bullet. So this fair value gap right here is our entry point now. So we wait for the price to come into the fair value gap. We got a touch here. Now measurement from the best entry point to the target, it's over 10 handles. So now let's see when the price gets there. And it even got there before 3 p.m. ICT himself told us that this is the only strategy you will ever need. Now, it's not easy to learn. It's hard. It will take time. You will need to backtest a lot. But it for sure has a high win rate. If you guys like the video, leave a like and subscribe. And also check out the bootcamp.